Joining us right now for an extended interview, J.P. Morgan's chairman and CEO, Jamie Dimon. Good morning.
Happy to be here. And how are you, Becky?
Great to see you, Jamie.
Great to see you. Help us understand the thinking that got you to the point of making this announcement this week.
Yeah. So we went out to our folks and said we're going to have tax reform, which is good. Obviously improves the profits of J.P. Morgan. And what can we do to accelerate investments, to do more, to help lower middle-income households, to do more philanthropy? We want to do it thoughtfully because, you can't just automatically do all those things. So we're adding salespeople, opening more branches. It'll be about 4,000 or 5,000 jobs. And we think it's good for J.P. Morgan, and we think it's going to be very good for the economy.
You've got Jamie here.
Yeah.
Ask him if he's just doing this in a cynical way to curry favor with the Trump administration.
Well, no. So
if you finally got someone you can ask. That's what you've been implying about all this.
So what do you think has driven? So immediately within the day after the announcement was made, a number of companies, including, by the way, the parent company of this network, Comcast, announced one-time bonuses. By the way, what you're doing is not a one-time bonus.
No, but we already do one every year, $750 into people making under $60,000 a year into their 401k. So we already do stuff like that. And we also reduce the medical deductible for people making under $60,000 to reduce the burden of when you have large medical expenses.
So what do you make of the decision, the economic decision that companies have made over the past month?
So the way you should look at it, first of all, there's two things. Our tax system 20 years ago was the same as everybody else. Over 20 years, it's come down here. We've all known that is a huge competitive disadvantage driving capital, brains, companies, headquarters overseas. Studies have shown maybe even 5,000 companies net are owned by foreign companies today. I'm not against foreign ownership. I'm against uncompetitive. So once you become competitive, one immediate benefit is what people are doing today, which is good. I totally applaud what companies are doing is to say we're going to use some of this to help our people and help stuff like that. But the real benefit comes over time. Competitive taxes will have more capital, more jobs, more companies investing here, more foreign companies investing here. That will raise jobs, it'll raise wages and increase jobs. And it's better than it will always be. And I hate this argument. We didn't need stimulus today. You should have a competitive tax system in good times and bad times. I can't believe people think that having an uncompetitive tax system is a good thing for America. It shocks me that people even argue that point.
By the way, should we look at some of these bonuses and things as a temporary stimulus?
Yeah, like I said, I think people are going to do some things now to show that they're going to have more to give to help employees. But the important point...
But is that, by the way, a function of a tighter labor market? Or is that a function of we think that employees are going to see that our profits are so much higher?
That's what Larry Fink said. He thinks most people will be doing this anyway in terms of pay raises.
I think people do this, and then they'll be more aggressive when they invest over time. They might be more aggressive how they pay people over time. You're going to have a more competitive job market. Partially as a result of this, that's a good thing. Wages are going to go up. And I promise you, we're going to be sitting here in a year, and you all will be worried about inflation and wages going up too high.
Jamie,
that's what's going to happen.
You already said, I'm barely a Democrat. That was like 5 years ago or something, maybe more at this point. So you saw the rhetoric from Nancy Pelosi and Chuck Schumer and across the board, the word pathetic for this thing. It's a tax scam. It's a huge giveaway for the rich. When you're still a Democrat when you see that?
I'm not going to get into politics. We need a competitive tax system for the sake of America.
When you saw the way it was demagogued, when you saw what they said about it, is that productive?
It shocks me that they don't understand the importance of it for the sake of America. I understand the individual side. I might have done things differently. We were focused on the corporate side. So there are things I might have done differently on the individual side.
What have you done differently?
I'm not going to go there. But my point is, if you want America to be very competitive, you need a competitive tax system. And if you don't, it will hurt business in America, which hurts jobs and wages. And that is definitely true over time. And what you do on the individual side, you can have a huge moral argument about how you do it and how you go about it and stuff like that. So,
do you think the public opinion on the tax plan is evolving? And is it, when it was only 17% for, was that misguided? What should the public embrace this?
When you make it sound like you're giving money to rich corporations.
Who made it sound like that?
A lot of people, and yes, they're mostly from the other party.
Okay.
But the fact is that is somewhat true. But my argument is that capital investment in America, driving America, drives wages. Remember, for every big company, we're supported by 40,000 vendors. When we open those 400 branches we're talking about, there's going to be hundreds of jobs supporting those branches. There are going to be people building those branches. There are going to be people putting the internet into the branches and stuff like that. So, capital investment, the part of a large company, usually leads to 3 or 4 times more jobs per person in the plant itself. And, people understand that's how the economy works.
I'm still going to say, all right, here's Jamie Dimon, a fat cat CEO. Of course he likes the tax man. But you've made the point that to tie or to completely bifurcate what's good for the common man and what's good for corporations, to completely say that they're antithetical is it's not really accurate.
It's good for business.
If it's good for business,
And if I remember correctly, 150 million people work in America, 125 million work for private enterprise.
Right.
At the end of the day, that 125 million is an ecosystem like this, big and large. We support large companies and small companies. They support each other, but if that grows, everything else can take care of itself. And, as a matter of fact, people legitimately say it's part of national security. Having a weak economy is bad for national security in the long run. And several military people have told me that. But, let's make sure we have a strong economy. So,
President Trump's going to be here on Friday.
Yeah.
What do you want to hear him say?
Listen, I saw Steve Schwarzman in the show talking about that they spend a lot of time on this. They're doing a lot of, on the policy side, a lot of pro-growth. I'm not going to say regulatory reform, having regulations that make sense, that kind of create proper control on companies doing bad things, but also, enhance growth and stuff like that. We're pro-immigration, so I'd like to see him describe pro-immigration. He's pro-DACA. I've heard him speak about it many times. And, they have to negotiate the whole immigration bill. And trade, I'm a big person in trade. I think it's a very good thing. I think there are legitimate issues that are being raised by the administration in trade, much more around China than around Mexico.
Intellectual property, you mean?
Well, property, tariffs, non-tariff barriers. When Americans speak and they talk about fair, they mean reciprocal. Mm-hmm. That's not exactly what the Chinese mean by fair. And you don't have to have a reciprocal system to be compliant under the WTO.
Right.
And so there are these issues that need to be resolved, and they need to be done strategically, long-term, really think it through and do it right. And so I think you're going to hear that. Gary Cohn was on, I guess, your show or something, talking about, America first doesn't mean America alone.
Steve Mnuchin, though, this morning talked about how a weak dollar may be a good thing. You agree with that? And you like the idea that the Treasury Secretary is saying that publicly?
Usually Treasury Secretaries don't comment on the dollar, and usually a strong dollar means a strong economy. But what you have today is a strong U.S. economy, and even stronger than what people expected, Japan, Europe, and China. So very often the value of the dollar relates to the relative strength versus what people expected. And so I think it's fine if it's weak in the short term. It doesn't matter that much. So,
how are you thinking about the stock market right now? We had Ray Dalio on yesterday. He said, if you're in cash, you're stupid. But he also said that he thinks that we could get to a point where we have a recession before the next election.
I don't guess about the stock market. As J.P. Morgan, we build a company. People, sales, systems, offices, branches, markets go up and markets go down. And if you postulate that we're going to have a very good economy for 3 years globally.
You have a private bank. You have huge clients
yes,
who are trying to make bets, though, on the
market. They don't
market.
allow me to give advice about the market for a very good reason.
How do you get to 4% when you've heard the rhetoric from every person and Jamie, there are some people, God, I can't believe they would actually not want to get to 3%, but I think they've got a vested interest in it not being possible because their policies resulted in
I've never.
But with immigration and productivity, those are the two things. The aging population, they say 3% is basically impossible long term. How can you get to 4%?
It's not true. We've hampered, or I've said this for years. We've had 2% growth, which is kind of below norm. It's long, but it's half of a normal recovery. We've had 16%. It should have been like 32. And the reason for that is uncompetitive taxes, excess regulation, lack of infrastructure building, our inner city school education doesn't work, and that's why we're growing slower.
Well, Larry Summers would want to just go like that to you right now. It'd be some ad hominem.
No, I think Larry might agree that if we did all these things right, we'd be growing faster.
Not without population growth. Not without population
growth. Immigration would be a plus too.
Okay, what about how do you get productivity that's already at high level? How do you get that back? Is that
capital? All the productivity comes from
technology and
all the productivity comes from
R&D. I think it's possible. I lived through days where we.
You're going to see it, and people would say, "My God, it was." Because of what we did, it didn't have to be that way.
Will there be egg on the face of all the economists and all the people that say we can't do it?
I hope there is on those who say we're structurally stuck at 2% forever, yes.
There's not enough eggs around to be on there. I'm looking at you, too.
Thank you, sir.
You're welcome.
I think the question you always ask is, what is possible and what makes it possible?
So long term, we can grow at 3 then?
I think it's possible, yeah.
What about
I think it's possible we're going to hit 4% sometime this year. I think the people just, they always look at the past and they think that somehow it has to repeat. It doesn't. I made a list in my chairman's letter of the things holding us back, and they are extensive. And they didn't have to be that way. It was us making decisions a long period of time.
infrastructure is one of those things on the list.
Yeah.
And we've got all this talk around infrastructure, but it sounds like the two sides are pretty far apart yet again.
So infrastructure, again, you know, you look at the United States, this unbelievable country, we're blessed with everything, and yet it takes 12 years to build a bridge. The Bayonne Bridge in New Jersey, 12 years to replace a bridge that was about to fall down because of, 50 permits and multiple things. Shame on us. That's called bureaucracy and corruption and sinecure. And you see it all around the nation. We can't build airports, we can't build highways, we can't build bridges, we can't build tunnels, we can't build. That should be fixed. And so this administration, the prior administration, all try to fix that. That's doable. And of course, that costs us GDP, it costs us jobs, and it could be done. Here, Democrats and Republicans have a common objective. Both parties want that. And the only question is how you do it. Now, again, I'm not an expert or politician. They should figure it out. In any event, everyone has an interest in reducing the time to build a bridge from 12 years to 2. Germany, I think it's Germany and Canada, 2 years to get the permits. China is probably 1 year. I mean, you think we could aspire to do something like that. And by that means there's a whole pipeline of projects that are in the works that are taking year after year to be approved. So that's kind of that shovel-ready concept. If you just speed them up, you'd have a lot of projects out there.
We've had lots of conversations recently about cryptocurrency. We had a conversation in the fall about Bitcoin. You've switched your view a little bit on this?
I think you all have said enough. I'm not going to say any more. You guys are the ones popping this whole thing. You talk about it too much. You should stop talking about it and go back to something relevant.
So cryptocurrency, just take it off the table.
It's not my interest. I don't want to be a spokesman for or against.
You were sort of looking in my. You didn't mean to look in my direction.
No, I didn't mean to look here.
Okay, with the Bitcoin, because I'm clueless about a lot of things.
Okay, different but related. Mike Corbat, who was here before from Citi, he says that credit cards he thinks are on their way to extinction. Do you think that's true?
Well, it depends what he means by that.
And he thinks over the long term.
Yeah, but in the long term, it's going to be on a chip in your finger. Yes. It's going to be on your phone. But something.
But the other piece is, do the banks get disintermediated? Meaning, do we get to some kind of blockchain-like system where there's the third parties are peerless, but then there's no margin for you?
But yes, that is what Corbat meant. A different version.
That we're going to lose the business altogether?
No, a different version.
He meant a different version. But look, we work on all that too. Okay, we're not stupid. We're working on technologies to make it easier and seamless and painless. Generally, in almost all competitive businesses, generally margins come down. That's called capitalism. So we always prepare for that. Like, don't complain about it, just deal with it. And so you'll see it. You have to do things better, faster, quicker, cheaper in every business. And we've got, we got some great credit card products. We have some great products coming this year. Not just these 400 branches in new markets, but we have investing products coming this year and credit card products coming this year and more stuff that you could do on the phone, digital, with mortgage, with credit card, with your basic banking account. Some of those things be linked up. So we're not sitting still.
What are the other big banks that you think are doing well with fintech? I know we're going to have Lloyd Blankfein on. Yeah. They've invested in some fintech stuff. But how do you sort of, when you look at your traditional competitors?
Yeah. So we've invested in maybe
probably more than everybody else.
100 different companies. Now, look, again, technology. This is not new. You use technology to do a better job for your customers. If you don't, you lose. That was true 30 years ago, 20 years ago, 10 years ago. I think it's faster today. There are more competitors today. I do think in the payment systems is the one place that someone may come in and disrupt something. So, we try to be very conscious about both on the consumer side and we call the wholesale side. But then again, we're using it too. We're building blockchain type stuff. We're getting faster, quicker. These big new computers that Ginny was talking about help us do things cheaper.
The Z14.
Z14.
I was going to get one. I'm going to wait for the Z.
We have a whole bunch of Z14s.
And she said you bought them all. What color are they? Do they come in blue?
I think they come just in black, but I don't know.
I want a blue one. So Dalia was on. He says, just to paraphrase, I think he kind of said that 4% is the new 8% in terms of where we'd need to worry about dislocation and actually not
interest
being able
rates.
to, interest rates, not being able to service the debt that we've built up. I guess my question is, we kind of think that it's clear sailing for the Fed. They orchestrated the recovery from the financial crisis. They blew out the balance sheet, but we're going to be fine in sort of reversing it. Is everything going to be okay?
I think it's very hard to say that the Fed made it fine, benign, or it was benign and easy for the Fed to deal with. So, the next Fed chairman may not have a benign environment to deal with. So as long as you have, but the most important is growth. So it's not just where the rates are going up, it's growth.
Right.
If you have healthy growth and rates are going up, the economy will probably be fine.
4% wouldn't scare you in terms of what about 5%?
No, the world should expect 4%, maybe even 5%. And if you were a borrower, you should be very careful if you have too much interest rate exposure, or interest rate mismatch, or currency mismatches, all that kind of stuff, or too much leverage, which I think, there's less than people think in the system relative to years ago. If you just compare everything, other than governments, by the way. And governments can deal with it easier than corporations can or individuals.
Jamie, I won't ask. Go ahead.
That just doesn't sound nearly as I mean, I think Dalio was.
Dally was very
kind
concerned.
of a warning.
Right.
Kind of a warning about what.
Because if interest rates go up by 25, 50, 75%, even if it's off a low base, he thinks that's a bit jolting. That was his.
Historically, it's low.
It is, but again, consumers are in very good shape, and credit card balances are still not unbelievably high. All credit extended in the United States has been almost super prime. Mortgages, credit card, the subprime component is much less. Middle market companies are in very good shape. Small business companies are in very good shape. Large corporations generally, if you look at their balance sheets, are in pretty good. Most of them hedge their interest rate exposure, so it doesn't like they're out like they're betting an interest rate. So, but like if you have, eventually you might have growth slowing down, inflation going up, rates going up. Yeah, someone's going to get hurt, that happens in life. And again, my job at JP Morgan is build a company, serve the clients. I completely understand the weather may change.
Yeah.
I don't spend a lot of time guessing about what's going to happen to the weather. I just don't know, but we try to analyze all that kind of stuff.
I mean, we're sitting here, and from just about everybody you talk to, everything is going gangbusters. Things look great on just about every level, in every country around the world. And that's when surprises can sneak up. If there was something you did have to worry about, what would it be?
Yeah. So first of all, it's like we can't believe things are doing so well. I mean, we should be happy.
It's been a long 10 years.
It's been a long 10 years. And this is going to help citizens around the world and remind people we could have good growth, and remind people that good policy will lead to good growth. And of course, there are going to be things that disrupt it.
But don't look at the big man around the corner?
I don't see any pothole. I can't see, but I acknowledge that I may not be able to see the pothole, but I can't see any pothole like you had in 2006. You had huge leverage in funds, in CDOs, in mortgages, in subprime, and nothing like that has taken place. You don't have that kind of leverage or exposure in the system, but it doesn't mean that rates can't go up, that recession can't go up, that inflation can't go up, surprise people. I mean, if it happens, am I going to be surprised? Not really.
Andrew, hold on.
I'm telling you it can happen.
So I
know it might happen.
Here's this smart guy. He's made a lot of money. One of the best investors around. He says, you, only Democrat not gritting his teeth. If you run in 2020, he'll vote for you. That's what this guy just
I
said.
don't plan to. So.
What do you mean don't? Okay, so that absolutely not. No. Huh?
I don't plan to.
Absolutely.
I don't.
You know you're going to get this question for the next 18 months.
That's fine. I don't make promises to anyone, but I don't plan to. No.
You're not running for Congress.
I don't
either?
think I'm a political type.
Well, can I say that I would say over the last 6 months, many of your friends, off the record and whatnot, have been whispering much more than ever before that they say, what's going on with Jamie? Is he planning on running?
Jamie's doing quite fine, thank you. I appreciate your concern. So.
And also, before I let you go, we wanted to get a little inside take on what's now being called this pre-Davos party that took place on Monday in Paris.
At Versailles.
In Versailles.
Paris and Versailles.
So what happened?
Before Davos.
Right.
Well, President Macron, I think it was wise. I mean, he knows people coming to Davos, so he had a function, which he said he's going to do every year and stuff like that. And he spoke for 2 hours or 2.5 hours, and mostly about policy. He pro-business, pro-capital, labor reform, knowing that all these things will help the average French citizen. He talked about trade. He talked about China. He's done a lot of things in 8 months. And so, after Brexit, we were all afraid about what might happen to Europe. Right. And after Brexit, instead of Hollande, you get Macron. And so
that's the first state dinner too. You saw that, right?
I saw that they're going to have that in April. Yeah.
And interesting comments about if he pulled a Cameron, he thinks that France might say, Frexit, not the drink, but
I don't think there's any chance. He was very.
There won't be a.
He is very, very pro-Europe.
Yeah.
But he acknowledges that some of the flaws that created some of the concerns in Brexit need to be fixed, which is exactly the right thing to do. And then pull it together, fix those flaws, and make the common market stronger. Make the regulations better. They do need some pan-European entities to manage, like the banks and stuff like that. So he's doing all the right stuff.
So you're not running in France either, I guess.
I'm not running in France, but they have made France. I mean, you talk about a bank. Their tax rates are going to 25%. They're not going to have a wealth tax on people. They want people to move there.
It's unbelievable.
It is unbelievable, and they're going to make it a very attractive place. And Paris, as you know, is attractive to start with, including education, and infrastructure and universities and all these various things. So,
Jamie Dimon, thank you.
Yeah.
This was a great conversation.
We could go until 9 with you. Thank you.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.